Morning, Steve Free in Chicago with the morning grain comments. First of all, there were no soybean or soybean meal deliveries for the August contract, and also the soybean oil deliveries were a little bit lighter than expected. Overall, prices are about unchanged. The only thing we see is these corn down about another 3 cents. As far as cash markets here are concerned in the United States, the soybean basis domestic is firming up a little bit. Looks like crushers need to buy some more beans before the end of this crop year and before the next harvest. Corn basis, though, is slipping a little bit lower, especially new crop on a lack of export demand. As far as the other news in the marketplace, we did see our weather guy put out a 30-day outlook for the U.S. weather. The odds of an early freeze, according to him, is relatively low despite the cool weather that we're seeing right now. His 1 to 15-day outlook for the first half of August would suggest that temperatures are going to be on the cool side. Rain will stay mostly across the southern Midwest, and the central Midwest may see normal to below rainfall. His 30-day outlook from August 15th to September 15th also suggests maybe temperatures will warm up, but I think the central Midwest will continue to see less than normal rainfall. All in all, I think from a crop perspective, this is not a bad forecast for the crops, especially from a temperature standpoint, but I think some of the central Midwest crops would like to see a little bit more rain than what he has forecasted. Jobs data this morning, a little bit more jobs were added in July than expected. That's helping the dollar. Could weigh on a little bit of commodity price action. And as we go into the remainder of this week, and going into the USDA report on August 12th, could see more of a sideways trade in the marketplace than maybe a sharp up or sharp down move. There was a Reuters poll put out on analyst guess for where prices are going to be on December 31st. The average guess was pretty close to where the contracts are right now for wheat, corn, and beans. The range though in corn was as much as $1, for wheat $2, and for beans is almost $4. So it's kind of like throwing a dart at a dartboard to try to figure out where prices are going. If we see a 14 billion bushel corn crop, a little under 3.4 billion bushel bean crop, we should see carryouts go up, and we should see prices work lower, especially in the soybean complex. From a wheat standpoint, you're seeing a little bit of talk of increased demand for U.S. wheat exports because maybe a lower Black Sea wheat crop and some lower quality issues around the world. We're also watching the quality of our U.S. soft red winter wheat crop. That could actually offer support to wheat versus corn and maybe wheat spreads and also wheat basis. So in general, we're looking for kind of a sideways trade today. Most of the economic news is a little supportive this morning, but as far as crop news globally and here in the United States still is a little negative. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.